Hey guys, I hate to interrupt, but I just wanted to take a moment to say if you're studying for the CPA exams and you like the visual learning approach that we take in this video, definitely check out Universal CPA Review's free trial. You can do this by going to www.universalcpareview.com, or you can click on the link in the description of this video. From there, you could take a sneak peek at Universal's platform, which includes animated video lectures, study guides, and practice questions with task-based simulations that come with video explanations that walk you through the solution step by step, kind of like having a tutor by your side. Okay, enough of that. Let's get back to it. Okay, so shifting gears here a little bit, the next topic we're going to address is the topic of dependence. So dependents are not as important for tax purposes as they used to be because there is no longer an exemption available. But that doesn't mean that dependents aren't relevant. Okay, so there are a lot of tax benefits that a taxpayer can still take because they are able to claim a dependent. Okay, so the rule here is that a taxpayer can claim certain individuals that they support as dependents during the tax year. Okay, so let's say that Tracy Tanner had a newborn child halfway throughout the tax year. Right, call it June of the current year, but she obviously supports the baby for the entire tax year. Good news for Tracy Tanner is that she's still going to be able to claim this child as a dependent. So the point I'm trying to make is that the taxpayer will still receive tax benefits even if the dependent was born during the tax year. Okay, so scenario number 2, let's say that Tracy Tanner is taking care of a dependent during the tax year and the dependent dies halfway throughout the year. So as long as they meet the requirements to be claimed as a dependent, they will still be able to be claimed by Tracy even if the dependent died during the year. Okay, so in summary, dependents can be claimed even if they were born during the year or if they died during the year. So there are 2 primary tests that you should be familiar with for dependent requirements on the exam. And those 2 tests are going to be the qualifying child test and the qualifying relative test. The qualifying child test can be thought of as step 1. Right, the whole idea here is that the taxpayer is looking at their dependent and they're trying to decide whether or not they meet the criteria to be claimed as a qualifying child. If they don't meet the criteria to be claimed as a qualifying child, does that mean there's no chance that they can be claimed? No, it does not. So they can still potentially meet the qualifying relative test. So this is step 2 and sort of the fallback plan. So for the exam, you need to understand what the criteria is for both, again, the qualifying child test as well as the qualifying relative test. So in order for a person to be claimed as a dependent, the taxpayer needs to meet 3 of the following tests. Okay, so they need to meet the dependent taxpayer test. So what is this? Basically, in order to be claimed, the taxpayer cannot qualify as a dependent of another person. Okay, so somebody can't claim Tracy Tanner while she is also claiming her child. Okay, so we also have the joint tax return test. Basically, what we're saying here is that the taxpayer cannot claim a married person who files a joint tax return as a dependent unless the married person files the return only as a claim for a refund. Okay, but basically what you need to remember here is that this is going to be applied to the qualifying relative test. Okay, so we're not going to be able to claim a qualifying relative if the taxpayer files a joint tax return. And then finally, we have a residency test. Okay, so the dependent must be a U.S. citizen, U.S. resident alien, U.S. national, or a resident of Canada or Mexico for some part of the year. Let's take a quick break and catch our breath. Woo. If you like what you see in this video, well, you're not alone. Okay, many students who studied with Universal CPA Review have found a ton of success. And if you don't believe me, you could take a look at our reviews on Trustpilot. Trustpilot is the most legitimate third-party review site that ensures that our reviews are completely legitimate. Universal CPA Review is not only the best CPA exam study option for visual learners, but it's also the most cost-effective option out there. So if you've already spent thousands of dollars on another CPA review course, we totally understand, and we want to help you out. So take a look at our free 7-day trial and see if Universal CPA Review is for you. You can start your free trial by going to www.universalcpareview.com, or you could take a look at the link in the description of this video. Okay, so let's start by going through the qualifying child test. And again, let's think of this as step 1. All right, so there are 4 tests that must be met in order for a dependent to be claimed as a qualifying child. So we're going to remember the CARS mnemonic. Okay, so C stands for the Child Relationship Test. Okay, so we must prove that our dependent is a qualifying child, right? This is a child of ours. So if Tracy Tanner has a child that she is looking after and is attempting to claim as a dependent, that child must be the taxpayer's son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or a descendant of any of them. Okay, so that's a little bit sneaky, right? We're talking about a qualifying child, but the relationship test also includes brothers and sisters. The next big one is the age test. Okay, so this is one that requires that the qualifying child is under the age of 19 years or older, and this is important to keep in mind. They can also be under the age of 24, right? That age limit is extended if the individual is a full-time student, right? Meaning that if Tracy is supporting her child while they're in college and her child is a full-time student, then she could still claim them as a dependent. Okay, so something else to remember about the age test is that if the child is permanently or totally disabled, then they can be claimed as a dependent regardless of age. Okay, so the R in CARS is our residency test. So the child has to live in the same principal residence as the taxpayer for more than half the tax year. Okay, so we're going to focus on half. Okay, so again, the qualifying child must live in the same household as the taxpayer for more than half the tax year. And this is going to flow into the support test, which is the S in our CARS mnemonic. So the child cannot provide more than 50% of his or her own support, right? Tracy Tanner needs to prove that she is supporting the child because she's the one that's trying to claim them as a dependent. Okay, so again, has to live in the taxpayer's home for more than half the tax year, and the child cannot provide more than half of his or her own support. Okay, so that's the primary focus area for the qualifying child test. Something miscellaneous to keep in mind is that there are multiple support agreements. And basically what this means is that a child can be a qualifying child for more than one person. Okay, so what you need to remember is whoever is claiming the dependent as a qualifying child is the one that is taking the tax benefits. Okay, so what if there are children of divorced or separated parents? Well, the person who could claim the qualifying child is going to be the one that is the custodial parent. All right, so that's a little nuance to keep in mind as well. Okay, so we've gone through the qualifying child test, and if the taxpayer has determined that the dependent does not meet the qualifying child test, they could still potentially meet the qualifying relative test. Okay, so we remembered the CARS mnemonic for qualifying child. For qualifying relative, we're going to remember the mnemonic SIR-N. So the S in SIR-N stands for the support test. Okay, so there's a similar support test for qualifying relatives as there was for qualifying children. So in order to be claimed, the taxpayer must provide more than 50% of the individual's support for the calendar year. Okay, so if they are going to meet the qualifying relative requirements, they need to, again, be providing more than 50% of the dependent's support. Okay, so the I in SIR-N stands for income. Okay, so in reality, this is the gross income test. Tracy Tanner needs to prove that the person that she is supporting doesn't make enough income to support themselves. Okay, so keep in mind, qualifying gross income is only going to be that gross income that is taxable. But you also need to remember this limitation. So anything in excess of this amount is going to prevent them from taking the qualifying relative as a dependent. Okay, so again, gross income must be less than this amount. And it's only includable gross income. Okay, so non-taxable gross income, aka Social Security at the lowest of levels, tax-exempt interest income, right? That interest income from state and local bonds. Okay, stuff like that, as well as tax-exempt scholarships. If it's tax-exempt, a little red flag needs to go off in your brain and say that this does not count towards the maximum dollar value limitation. Okay, so the R in SIR-N stands for the relative test. Okay, so if we remember, qualifying children only included children as well as siblings. So to meet the qualifying relative test, this can be expanded a little bit further. Okay, so this could be parents, grandparents, could also be uncles, nieces, and nephews. Okay, so think about your family. And if this is anybody that you think is obviously a family member, they're going to meet the qualifying relative test. Okay, so tying this back to the support test. So the taxpayer must support the dependent for more than half the tax year if they are a qualifying relative. But there are some additional requirements for the N in SIR-N. So this is if it's a non-relative. Okay, so believe it or not, a taxpayer can still claim a dependent for non-relatives under certain circumstances. So again, ask yourself, is this obviously a family member? Yes, I understand that certain friends feel like family members, but if this is not actually a family member, per the IRS's definition, well, they can still qualify, but they need to meet the non-relative test. So if Tracy Tanner has a sorority sister who is living with Tracy because things are going weird in her life, and Tracy supports her former sorority sister, and all of these additional tests are met, she will qualify, okay? But in order to qualify as a non-relative, the dependent must live with the taxpayer for the entire tax year. Okay, so this is a specific requirement for non-relatives. Okay, so keep in mind for both the qualifying child and qualifying relative tests, the taxpayer needs to meet all of these requirements in order to qualify. Okay, so if any of these tests are not met for either of these two sets of criteria, then you could just throw it out. Then they're not going to be able to be claimed as a dependent.